What is up, party people? It's Nico. We closed on Friday, and let me tell you straight up, it was ugly. This was hands down the hardest raise that I've ever done, and one of the messiest closings that I've ever been part of. Now, if you scroll through Instagram or LinkedIn or Facebook, all you see is "we closed" pictures with 10 people in suits smiling and holding champagne. Everyone looks like they're killing it. But what you don't see is the chaos that actually happens. The reality is, this business is brutal, it's messy, and sometimes it feels like it's designed to break you. So today, I'm going to walk you through what really went down for this particular deal. No fluff, no highlight reel, just the truth, because that's how I always do it for you. And if you want to be in this game, you need to know what it actually looks like. Right, let's talk a little bit about the backstory here. So this was a smaller deal in the grand scheme of things, right? It's a 13 unit deal. We're talking about, a potential $400,000 capital raise, not millions, not some flashy giant syndication, just enough to get this thing to the finish line. And on paper, it looks straightforward, right? I know the market very well. This is in Lakeland, Florida. This is where I have my other 70 units. I know the numbers well, and I know exactly why I wanted this property. I've been in this game now for just about 6 years, and I've seen a lot of people come and go. A lot of big names disappear here, guys. A lot of like giant syndicators who were closing many deals with some of my good friends who were investing in those deals completely failed, more than just capital calls, total loss on those people's investments. But I'm still here. I'm one of the small guys and I'm making it happen. I'm making it work. And it's not freaking easy. It's freaking crazy. And 6 years later, where does that leave me? I'm still working a W 2. I have three other jobs. I work all the time. I am not financially free, but I'm still here grinding away and I'm still producing returns for my investors. And I'm still in the game. And that's very important. I've watched people come and go, guys. I say it. People are gone. They're done. They're out of this industry. And you know what? It's for the best. A lot of people become too aggressive and a lot of people just don't do things properly. You can't just throw caution to the wind in this industry. Sometimes you get lucky, but luck is not a strategy. You cannot base your strategy on luck. So let's talk quickly about the deal. This is a small 13 unit deal consisting of two properties, older vintage, wood frame, in a great area of where I invest in Lakeland, Florida. Remember, I have 70 units in Lakeland. This now makes it 83. We have a 6 unit deal also that is in Plant City. So this is a total of 89 units for me. But that 6 unit deal was a flip. We bought it in April. Now it's October and we're selling that one, God willing, October 28th. And that is a huge win for me and my team because we were able to secure excellent returns, should all go well, on October 28th, which happens to also be my daughter's birthday. So the 6 unit is not my main strategy. We don't typically flip, but that was an opportunity for us to flip because we got it at a great price point. Now this one we're buying at 90 a door. Okay, so 90 a door in a B class area. We have never invested before in a B class area. We've always been in the C minus space. Investing in C minus neighborhoods can be extremely management intensive. There's a lot of hands on, there's a lot of turnover, there's a lot of expenses that go into it, different than a B class, hopefully. So here we are, a 13 unit deal, two properties, an 8 unit and a 5 unit, both commercial technically, even though the 5 unit is small, commercial multifamily, stick built, 1920, 1930, very old properties in the middle of Florida, Lakeland. Now, why did I like this property? I like it for a lot of reasons. It's got a great unit mix with studios, ones, two, and three beds. So I love that. It's in an excellent location where you're downtown Lakeland in a historic district, which is beautiful. People like it. People want to live there. And the median income is solid. Okay, so this is not necessarily your C class area. This is more of a B class area. And my property manager and partner, Mark Dowsett from RPM, also manages properties nearby and does very well with those properties. So I'm excited about this one and I liked it from the bat. So I started negotiating with the broker on this deal. He wanted 1.4 million. I ended up paying 1.175 for this one. Now, for this particular deal, 1.175 for the 13 units is a great deal. However, I wanted it for a bit less. 1.125 was really my strike price. I ended up getting it under contract at 1.175 because I knew the value of this particular area. Also, he had another offer at 1.2, so I wasn't technically the highest, but he knows that I have the ability to close, which was security for the broker's mind. So he chose me. I was happy. We started due diligence. Everything was great. And during the due diligence period, we noticed some things that we did not notice before. So we ended up renegotiating a bit basically on safety issues, some things that needed to get taken care of for insurance. We know that insurance is going to slam us on it. So we ended up essentially getting a 10, close to $11,000 seller credit off that purchase price. Now let's move on to the capital raise. So for all of my deals that I do as a syndication, and even the ones that I do as a JV, I do a webinar. I host something where me and my team get on, we do a presentation, we invite people to watch. If you've never been to one, it's good education. Even if you don't invest, it's good to kind of see what goes down. Okay. So we did a webinar, and this was actually at the same time when I was having serious personal issues. I always have a lot of personal things going on. I'm sure you guys do too. I have a blended family. I work 4 different jobs. There's always something that's going on, and I'm sure you do too. So it was very painful for me, and it was really challenging for me to get through just even the due diligence period, along with the webinar and then the capital raise. So the strategy from the bat was to go into this property with 5-year fixed rate debt with a local bank. That was probably going to give us the best chance at this one, given its vintage, given its size, and given the current loss to lease in place. So we were going to go with the local bank, and our capital raise is going to be anywhere from like 450 to 600, I think, if I remember correctly. And after this webinar, I started doing my calls and calling people and reaching out. And I was striking out, which always happens, and it's fine. And during a capital raise, I send out emails to everybody who's on my newsletter list. And I have about 500 or so people in there. I haven't been able to grow that. I haven't focused much on growing that. But you would think that about 500 is a decent amount. And I got zero activity from that. And then I sent multiple follow up emails as well. I got zero activity from that. So I ended up opening up my tighter list of investors, which I have on a spreadsheet. And I continually grow that, and I curate and I talk to people. That's where I kind of put notes and things like that. So I have a spreadsheet set up for that if you want, and I can share it with you as well. But it's a basic spreadsheet with people's names and then like first outreach, second outreach, results, and stuff like that. And then I can kind of have set them up as like a warm lead, no go, or, things like that. So I have different ways to categorize people on that investor database. And I was going through the list, and I try to get through maybe 50 to 100 a night or a day and have like real conversations with people. And it's a lot of work. And I was striking out, which always happens, guys. I don't expect to do well. I always expect that it's going to be a challenge, but this time was ultra challenging. And then my partners on this team were not able to raise anything either. I don't know if they were trying or what was going on, but they were coming up short. A lot of the conversations that I was having with my investors was, well, I don't have capital right now. Of course, we get that. I don't like this particular area. I don't know the area. We got a lot of, I don't like the vintage. Nobody wants to go in a 1920s stick built property in Florida where there are termites and hurricanes and all this stuff. But we had our inspector, Matt Hawley, down in Florida, who we've used for all of our inspections, inspect the property and actually say to us, these properties should last another 100 years with proper maintenance. So that gave us the peace of mind to move forward. Otherwise, we wouldn't have moved forward on this deal. Just to be clear here, Matt has turned us off from a few deals, and we've spent thousands of dollars on inspections with him. He's our friend at this point. He's also in the same community that we are with investing. He is also a multifamily investor himself. So he understands what we need, and he has turned us away from projects. So we quoted him saying, there is no reason why these properties should not last another 100 years given proper maintenance. Now, the past owner that we took it over from put a lot of CapEx money into this. He's done a lot of work on it. And every 7 years, he tents the properties for termites, and he has a termite bond. So we are safe and we feel good. And actually, this property just got tented July, right as we were getting it under contract. Okay. July 2025. Now, as I'm going through and I'm talking to my investors, yeah, they don't like the vintage. I combat that with Matt Hawley's quote. They don't like the area. Okay, well, I now have 70 units in this particular area. I know exactly how these things operate. They don't like the economy and where the economy is going, and the interest rates and tariffs and things like that. It's just making people fearful and worried. And then another issue was they don't have money, they don't have capital. I get it. Maybe they're invested in other things. But one of the main concerns that I've heard from people was a lot of my trusted investors are pulling out. And they're pulling out because they have operators that they were working with that have failed and have lost all of their funds. So can you imagine people investing with somebody? And of course, we know that there are capital calls out there, but what about losing 100% of your money? That will cause investors to completely drop out of the game. And that is where I found a lot of issues. So I ended up doing the entire capital raise all by myself. It was grueling. And in the end, I had to change our strategy. We had to go from fixed rate debt with a bank, a local bank. I couldn't do it because the capital raise was too high, to a bridge product, which is a short term, risky, high interest rate product. So here we are today. I changed from a 450 to $550,000 capital raise to a $250,000 capital raise just because I couldn't get enough money in the bank. So there we are. We're working with the lender, and it was a bridge lender, and they interviewed me and my partner Shane because we were the ones signing on the loan, and they really went deep on us and they on our background, and we had like to go through some serious checks to make sure that we are good enough for this particular loan. And eventually, obviously, they took us because I do have significant experience, and so does Shane. Now, Shane is as well working just as hard as I am to try to get the capital in, but he was failing on the capital raise too. My other partners as well were failing on the capital raise. They just couldn't get anybody to get investors. They couldn't find anything. When I can usually count on them to bring a significant chunk of the capital, this time I was the only one. So I spent a couple of months trying to raise capital, hundreds of phone calls, hundreds of text messages, hundreds of emails, hundreds of Facebook messages, hundreds of conversations. I hopped on calls with people at crazy hours for me when I worked 4 different jobs. I had to make the time to get on long calls with people to explain the deal, go over the deal, and I got so many no's. People just didn't want to invest. Maybe this is just not the right opportunity for them. Maybe it's just not the right time. Maybe they lost all their money with another syndicator and are now pulling out of this business altogether. So there are so many reasons. But guys, I can't tell you all the late nights I've had, all the nights where I'm exhausted, working multiple jobs, and I have to make these phone calls happen. I got to get it done. But this is part of the game. And you know what? Even you right now listening to this probably doesn't understand exactly what it felt like for me, but it was devastating and horrible. And I just wanted to quit, but I did not quit. But there was a lot of money on the line, right? So we put down $25,000 on this deal, which is over 2% of the purchase price, when typically I only put down 1%. And that money went hard after the due diligence period. And the due diligence period was cut early because I requested seller credit, right? So there's always a give and take. So if you don't know that, you're going to lose the due diligence period, you're going to lose that hard money, and you're going to lose your EMD. It's going to go hard. You have to understand the nuances of negotiating. So if you don't understand that, then back up for a minute. But it was difficult with my team, so they couldn't raise anything. I ended up doing everything myself, and I felt like I was all alone. But Shane jumped in, and Mark Dowsett eventually jumped in as well to help me out. Everybody's got a million things going on. My partner Sasha was just buying a brand new business and working super hard on that. Emeka too got a new job, and he's working on that, and he had to travel a bunch as well. So things just happen. This is part of life. Things happen. So when everything falls on me, I felt like it was very challenging for me, number one, and number two, time consuming and exhausting. And then also I just felt scared until I had my partner Shane hop in and really pick up a lot of the slack, and we did a lot of the work together, which really made me feel good. It gave me that confidence boost that I needed to keep pushing and keep going. Sasha as well was like, "Hey, Nico, I believe in you." And he gave me the go ahead to release the EMD. You know what I mean? So, like, having these partners on my team is crucial and critical. They give me the support needed and confidence needed. But the capital raise fell all on me, and I hate capital raising. So, I know that from now on, the next 12 months or so, I really need to focus on better capital relationships. That's my goal for the next 12 months. Although, yeah, my favorite part is acquiring deals, getting deals done. I know that I need to focus on that moving forward. Okay, next up was the closing table. We were supposed to close on September 15th, 2025. I had to request an extension because I didn't have all the capital in the bank, and the bank wasn't ready as well with their part of things. Because if you know, when you take out a loan, there's a lot that goes on, and things don't always close on time. So I requested a 2 week extension. Now, I had set this expectation in the broker's mind for a month prior that I might need an extension, that I might request a 2 week extension. He kept pushing it off and saying, let's just wait until the Friday before to request that extension because I don't want to upset the seller. I said, fine, I'll let you take the lead here. You know your stuff, so let's do that. Well, we will wait. Then come Friday, and he says, no, we're not going to do the extension unless you give back that seller credit. So that was almost $11,000. And I held firm. I said, no way. I actually spoke to other brokers as well who advised me to just hold firm. So I ended up using a lot of Chris Voss's techniques. And if you don't know about Chris Voss, he is the author of Never Split the Difference. He's got an excellent book out there for negotiating. So I used his tactics, and I ended up getting the seller to agree to return $1,500 rather than $11,000. So again, I shouldn't have given back any of that seller credit, but I was driven to get this done, and I wanted everybody to be happy. And it was the last minute, of course. So I just let it happen. $1,500 gone off of our seller credit. Now, we got a 2 week extension, and I was still getting money in the bank, guys. I could not get the funds in the bank. And I actually opened up an Amex account for this particular project, which I've never done before. And I didn't realize that Amex could take over 24 hours just to receive a wire. So things were coming in so slow. I had to beg my committed investors to send the wires so that we can get the deal closed. Anyway, lo and behold, all of the money came in the Friday we were supposed to close. Okay, so it was 2 Fridays later or something like that. All of the money had just gotten into the bank and we were short 5,000 or so. The lender would not allow us to take investor capital in. It had to come from my account or from Shane's account. Thankfully, Shane ended up wiring that money. Our partner, Mark Dowsett, stepped in as well to help reimburse Shane. So we got the money in the bank last minute. And then Monday, we were set to close and things were just going south. Our lender's on the West Coast. Our title company is in Florida. And our title company that I did not hire and I will never work with again, and I've worked with them in the past and they were terrible as well, they did not set up a mobile notary for us and they didn't know how to. So anyway, I ended up getting my attorney to set up a mobile notary. They set up a mobile notary for me and Shane on a Monday, right? When we were supposed to close. The mobile notary got to my house at 8 p.m., obviously way too late. The title sent bad instructions to the mobile notary, so we had to redo everything the next day. Me and Shane both had our mobile notaries come that night, and both of the mobile notaries had poor instructions from the title company, so they couldn't get it done. Okay, come the next day, now there's all these other issues on a Tuesday. We couldn't get the property closed, and we had expected to get it closed that day. We had to get an extension, an addendum to extend it for 24 hours. Title company could not get their act together. They consistently made mistakes. They consistently sent wrong information, requested new information. It was a mess. The lender was ready to go, but title messed up. So then come Wednesday. So now it was Wednesday. We needed another extension, and the title company requested us to extend until Friday just in case. So you know what? In my mind, games are happening. In my mind, I think that the seller, and I could be wrong here, but in my mind, the seller and the broker are just trying to stick it to us to make sure that we pay more money to the title company or get rid of more money of that seller credit that we had negotiated during the due diligence period. So call me crazy, but I think that's what was going down because there were some ridiculous things that were being requested, some missed information that was so easy and obvious to tell, little errors here and there that just made this deal very strange to me, in my opinion. And I was skeptical, and maybe rightfully so, maybe just paranoid. I don't know, but it was a very strange closing. We were supposed to close on Monday, the 29th. We ended up closing on Friday, October 3rd. Okay. So what happened during that time period? Wednesday comes. Okay. Now, the next day is a holiday, Yom Kippur. I don't know who celebrates it, who's open, who's not. My school was closed. So we had to get a new notary come to us. New mobile notaries went to me and Shane on Wednesday night. I got mine done just before 6 p.m. And the only FedEx that was open, because we had to FedEx overnight these, was in JFK. So I had to drive all the way to JFK. I took my daughter. It was insane. Now, as this is going down, the exact time this was going down, my daughter's having a meltdown. We had just gotten out of the ocean because I surf and I do the surf instruction. It's one of my jobs. I'm a surf coach. We got out of the ocean. We're sandy. My daughter's still in a towel. Her tooth falls out as we're eating dinner. Her tooth comes out. She's crying. It's pouring blood. And I'm on the phone trying to get the mobile notary over. It was complete insanity, complete chaos. Also on the phone with Amex trying to see if the final wire went through because this was down to the wire. We had to get more money in the bank. They requested a couple $1,000s extra just in case. So I had to get more money in the bank. The wire wasn't going through. It was chaos. So once I got my daughter settled, once we got the notary done, we both jumped in the car. We went for a 45-minute ride during rush hour to go to JFK to mail these things out. And I made it before the 8 p.m. cutoff time. It was fine. It was like 7:30 by this point, so I had plenty of time. Now, I didn't hold my breath once I sent those documents in. Shane sent them in as well. He missed the cutoff by like 15 minutes. He's in Colorado. He was able to get it in on time. So I didn't hold my breath. Now, come Thursday. Okay, so you think all the documents are in. Now, my documents got there in the morning. Shane's didn't arrive on Thursday. They ended up arriving sometime on Friday, which is kind of ridiculous because we had the tracking number. They said that they arrived, but the title company says they didn't get them. I don't know, guys. Shady. It sounds really ridiculous and shady. Or maybe, again, maybe I'm paranoid, but whatever. It was very strange. So then comes Friday. Now we're scrambling to close on Friday. What a ridiculous experience this was. So now on Friday, we're still waiting for title to clear everything. All of the funds from my account had finally hit. So I had to add new funds because they're charging us more money now. And they gave us a new bill. I requested an itemized bill. It was never itemized. They just said, well, we charge X amount per day or per hour. And we have to do a certain amount of hours per day. So it ended up being that they were charging us another $3,700 or something ridiculous just because they made mistakes. Absolute joke, guys. You can't make this stuff up. Now, all this is going down at 9, 10, 11 a.m. in the morning on Friday, thinking that we can close. Now, don't forget our lenders on the West Coast, so they don't even start work until noon. So now comes like 12:05, and we get some messages from the title company requesting from the lender whether or not they can release the funds. And the lender's saying, yes, we're good to go, release the funds. And then the title company is just verifying X, Y, and Z. I don't know why, but whatever. And finally, they're going to release the funds. And then I look at the closing statement. They finally updated the closing statement, the HUD. And there's this $1,500 seller credit to the seller for prorated rents, which makes no sense at all. And when I questioned the title company's response was, oh, the seller will cut you a check after closing. And I was like, hell no, that's not happening. So we had to get the title company's boss on the phone to ensure what the heck. They tried to scam us, they tried to screw us over. And there was no security for us, there was no safety in us waiting till after close to get a check from the seller. Get out of here. That is a joke. Now it's 4 p.m. And at 4 p.m., they finally sent the revised HUD statement. They got all these extra funds in the bank that I had wired, and it's reduced. So now we only had to pay 213,000 or something as opposed to 226,000. So that's a big difference. Very, very big difference. But still, the extra charge from the title company was on there, and I was trying to fight it. Here's another story. I actually had to go to the police station that day to deal with some ridiculous chaos. And it was 4:30 in the afternoon, and I was supposed to be at work, working at the surf camp at 4:30. And I was on the phone with my partner, Shane. I was on the phone with my therapist, and I was in front of a police officer. And I said to Shane, I said, dude, I cannot look at or review any documents. You tell me when I need to sign, and that is it. So he texted me. He said, sign now. I went to my inbox in front of the police officer that I was dealing with some nonsense for. And boom, I signed it and we were done. That was it. Now, I got to work 30 minutes late, so I got to jump into the ocean. Thankfully, that was a relief for me. Me and my daughter, we went surfing, and it was a great surf session. I got there 30 minutes late, and I didn't even have the time to think or consider that we were closed or care that we were closed because it was such a turmoil, such a mess, such a sloppy, ugly, crappy closing that I just couldn't even enjoy it. And I don't typically enjoy the closings anyway. I don't go out and party and have a beer because number one, I don't drink. And number two, I think it's just absurd because all the work is about to start. We're going into this deal right now about $45,000 in debt because I didn't mention a few things to you. We had to continually reduce what was on that HUD statement of what money we had to come out of pocket with because I just couldn't do the capital raise. I ended up raising about 220. So we really needed 250 in the bank minimum just to skate this thing by. But I had about 220. So I pulled off the legal fees, which was $10,000. I paid that with a credit card. And I had my buddy, who is our insurance broker, really good friend of mine, float $16,000 for us. So that is a huge amount of money that was floated for us and pulled off of the closing statement. Thank goodness. Now, what does that mean, though? That means I'm in debt now for $26,000 going into closing. We closed, taking over the property in debt. How are we going to pay our bills? How are we going to make it to the next month? So these issues, which are not minor, make it very difficult for me to sit there and enjoy and party and celebrate. I'm not going to do that. I don't watch TV. I don't go partying. I don't drink. I don't do that stuff. I work. I hustle. I get the job done. So now I got my brother-in-law investing 10K. He's coming in. Now, since we're closing our 6-unit deal and selling that, we have an investor that is extremely happy on that deal. She's going to put in 20K with us. We also have me, my partner Shane, and my partner Mark, who are getting the proceeds from that. We're going to roll it into this. So all said and done, we're probably going to be okay. But safety and security, if that's your thing, you're not going to get it in multifamily. You need to consider a different path. Because look, I'm going into this and I figured out all the debt that we have right now and how much we have to be repaid and paid back and pay what. We're actually starting this deal off right now, $45,000 in debt. I need another $45,000 just to feel good about our reserves and making sure that we can pay the mortgage for the next 6 months or so, while also escrowing, et cetera. So we need $90,000 from today in the bank. Again, how we're going to make that happen based on exactly what I just told you. My brother-in-law, the awesome investor, from the 6 unit and maybe even another investor for the 6 unit who's interested in this one. And then me, Shane, and Mark. We're going to roll our proceeds into this. This is what's called a poor man's 1031. So if you sell a deal within a fiscal year, you're subject to capital gains taxes. How do you reduce those taxes? Well, you can buy another deal because every time you acquire a deal, you're incurring a loss. So we're going to get a K1 for this new deal, and it's going to show a huge loss, which I can use to offset the other gains that we got for selling the 6 unit. So that's called a poor man's 1031. You can also just do a regular 1031 exchange where you don't have to pay taxes, but there are nuances with that as well. And if you don't know the nuances, make sure you contact your CPA, or who probably doesn't even know about it, to be honest with you, a 1031 specialist who will help you through that. So at this point, me, Shane, and Mark are all in, and I'm obviously inviting in my other partners as well, Sasha and Emeka, at whatever capacity they can be involved. And then I took on a new general partner, which I'm excited about. She's very interested in learning and growing and building with our team. So I'm excited about that. And she wants to do her own thing as well. This is going to give her credit with the bank and credibility now that she's a general partner. I will give her certain jobs to do. She's ready for them and excited about them. Now we have to start our initial communication with the team. I need to create a new chat with our team. I need to create a new weekly cadence with our team, and I need to start going and working on that. So, guys, this is so much. I have 4 or 5 deals at this point. I don't even know. And it's just nonstop work on my end. I work every single day on multifamily real estate, 7 days a week. And I do it in between jobs and during jobs. Remember, I'm a school teacher. I coach surfing, and I work at a restaurant as well at nights alongside of doing this multifamily real estate thing. And I am the lead on this multifamily real estate thing. Guys, it's a lot. It's ridiculous. And we're making distributions on 2 of our properties. People are excited about it, and we're doing well. And I feel very good and grateful that we're in the position we are in now, when many people, like I said earlier, are failing. So I have to say, this business just eats people alive. It's just the truth. There are people out there, big names that we know, who are just done. They're out. They're gone. They're done with this game. They raised too aggressively. They bought bad deals. They had floating rate debt. They went too levered. They're making capital calls, and investors are losing everything, guys. It's happening. Meanwhile, the operators who are really grinding, the ones who are actually running their properties and staying in the game, you don't hear from them as much. They're not posting champagne photos. I'm not doing that. I'm just surviving and slowly building. And I'm proud to say that I'm still here. 6 years in, guys. I'm still doing deals. I'm still standing. And I got to share one more thing about this deal. I couldn't do an acquisition fee because we couldn't pay for it. So now we're doing a disposition fee at refinance only if we can actually get the money to refi. So this is going to be very tricky refinance. The way I calculate every refinance is you got to be at least a 1.25 debt service coverage ratio at refi, which is going to be very challenging for us to get the proceeds that we need to pay off this other debt and roll into a new product. It is going to be extremely challenging. So the first 6 months of us operating this deal are going to be operationally intensive. And if you are not into that, if you cannot be hands-on every single day, all day, then you can't do it, because this is super risky. Number one, we're not going to get a refinance fee if we can't refinance out at least enough to get that fee. Otherwise, it states in my PPM, if we're just cash neutral, we are cash neutral. We are not getting any fee. Sorry. But the goal here is just to refinance into a better product so that we can cash flow better. I think that we can do it, but again, it's going to be so difficult, so challenging. And a lot depends on the future and what the future holds. So I am about to get into a risky situation here, right? I just called out all the people who had to do capital calls and lost all their investor money because they were too aggressive, right? Because they had highly levered products and perhaps bridge products, exactly what I'm doing. The difference here is I know the value of this property very well. So my plan B is to exit this property, is to sell it in 6 to 12 months, just like we did with Baker Street, the 6 unit deal. We're selling that in 6 months for an excellent return. The same thing can happen here. And that's my safe fall. So this is where knowledge, experience, education, and time in the game comes into play. I know what these are worth. I know that I got a discount. I know that I could sell them for X if we cannot refinance. There you go. What's the takeaway from this ugly little stinking deal? We closed. And that matters. It wasn't pretty, it wasn't smooth, but it got done. And that's this business. It's not glamorous, it's grind. So when you see people on Instagram posting, we closed, now everybody's a millionaire, that's just not the truth. I'm not a millionaire. I'm barely scraping by, guys, paycheck to paycheck with 4 different jobs. But what am I doing? I'm stacking equity. I'm stacking deals to eventually roll that into something bigger, just like with this 6 unit. And I'm going to have a great podcast on the 6 unit as well as soon as we close to share exactly how that went down. Very exciting stuff. But the objective here as a multifamily real estate investor is to take funds or equity if you don't have funds like me, put it in a deal, grow that, refinance or sell that, put it back into another deal, grow that, refinance or sell that, put it back into another deal, and on and on and on. Historically, prices have appreciated better than inflation. This is a real asset, so you are beating inflation while growing your capital. I highly recommend that all of the capital that you get gets reinvested right back into it. Number one, to save on taxes. Number two, to grow that. And number three, to consider that not income. That is not income. Eventually, when you have $3 million or so, whatever your goal is, that is what you use as a vehicle for a return. So that's what family offices do. That's what investors do, right? They have capital, they have things invested in businesses and assets that will pay them a return on that investment. So if I were to invest $3 million and I'm getting a 5% return, I'm going to be living nicely and the $3 million stays put. I just live off the interest. You can do the same. So if you want to play in this space, you have to understand it's not about the highlight reels. It's about who can take the hits and keep going and who can be still standing years later after complete chaos in this industry. That's how you win. And if you're one of my people out there grinding, keep pushing. If you're just listening and thinking about getting started, make sure you know what you are signing up for. You need to understand that a lot of people want to be a GP, a general partner, just for the role of it, just for the prestige, for the title of it. But do you really want to go through what I just went through? I highly doubt it. So if you want to learn more, and if you want to be an LP or a GP, and if you want to learn the real way to stay in this game for the long term, to build wealth, to build credibility, go to my website, smallactscommunities.com. There, you can find my podcast to give you education. You can find my multifamily deal analyzer, which is the best multifamily deal analyzer on the market today. You can buy that, and then you can join my Facebook group as well for free. My Facebook group is called Buy Buildings. You can join that for free. I'm currently editing my Buy Buildings Build Empires course. And if you want an early look at that, please reach out to me, DM me on any social media handle, or email me at info@smallactscommunities.com. And all right, my fam, that's it for today. I appreciate you guys. You're going to hear more of these stories. And if you liked it, I would love for you to share this with somebody else that you might think would get value from it and post it somewhere. Say, Nico's doing this. What a crazy son of a gun. And get out there, guys. Rock this week and let me know how I can help you. Until next time, keep swinging those axes. All right, and that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.